Singapore is home to 242,400 millionaires with more than $1 million in liquid assets as of December 2024. That's about 4 in every 100 people, making us the fourth wealthiest city in the world and the second in Asia, just behind Tokyo. But here's the real question. Are they truly wealthy or just paper rich? Because there are actually two types of millionaires. First, the net worth millionaire. This includes your house, CPF, car, and valuables. Singapore has over 333,000 of them. Second, the liquid net worth millionaire. This counts only usable assets, cash, stocks, bonds, funds, and excludes your home. And here's the truth. Your home might make you look rich on paper, but unless you sell or rent it out, it doesn't pay for kopi, groceries, or medical bills. That's why for real financial freedom, the goal isn't just to be net worth rich, it's to be cash flow rich. So stay with me until the end of this video, because I'll show you why being cash flow rich matters so much more, and how you can apply this whether you're still building towards $1 million or you already have it. If you find this helpful, like this video so more Singaporeans can watch it and subscribe to Wealth for You. Don't forget to press the notification bell for updates on REITs, banks, and dividend investing. Just a quick disclaimer. This video is for education and entertainment purposes only. It's not financial advice. Always do your own research before investing your hard-earned money. Chapter 1. Singapore's Millionaire Numbers. According to the Henley & Partners 2025 report, Singapore is home to 242,400 millionaires with liquid net worth of at least $1 million, or about 1.32 million Singapore dollars. These are people with investable assets like cash, stocks, and bonds, wealth they can actually use. In contrast, a UBS 2023 report puts Singapore's total number of millionaires at over 333,000. But this broader figure includes property such as owner-occupied homes. And that's where the illusion begins. Many of these people are what we call house rich, but cash poor. Their net worth looks high, but it's locked in property that doesn't generate income. This is why the 242,400 figure matters more. It shows the number of Singaporeans who have usable liquid wealth that can be converted to cash flow and passive income. Comparing Singapore, Tokyo, Hong Kong, NYC. Tokyo has 292,300 liquid millionaires, making it Asia's wealthiest city. Hong Kong has 154,900 liquid millionaires. New York City leads the world with 384,500. So for a small nation of just over 6 million people, Singapore still punches way above its weight globally. But the crucial question is, how many of these millionaires are truly cash flow rich, with income-generating assets, versus just being net worth rich on paper? Chapter 2. Is $1 million enough in Singapore? Whether $1 million is enough really depends on two things: lifestyle and inflation. Looking back at household expenses, in 1997 to 1998, the average HDB household spent around $2,681 per month. By 2007 to 2008, that number had climbed to $3,138 per month, an increase of about 17% in just 10 years. Fast forward into the future. If we project even a modest 2% core inflation rate, by 2042, the average HDB household could be spending close to $6,400 per month just to maintain a similar standard of living. That's only about 20 years away, well within the retirement horizon for many Singaporeans today. So, what does this mean for $1 million in savings? If you had $1 million in pure cash and simply drew it down at $6,400 per month, it would last about 156 months, or roughly 13 years. And that's assuming zero medical shocks, no emergencies, and no further inflation. Realistically, the money would run out even sooner. The big problem is, if your wealth is mostly tied up in your home or other illiquid assets, you can't use it to fund these rising expenses unless you sell your property or rent out part of it. That's why being net worth rich isn't practical. It looks good on paper, but it doesn't translate to financial freedom. The lesson here is that $1 million can give you a false sense of security if it isn't invested in income-generating assets. Without cash flow, even $1 million can disappear surprisingly fast. Chapter 3. Why Liquid Net Worth Matters. Property wealth is illiquid. Yes, your condo or landed property might be worth $1 million, $2 million, or even more. But unless you're willing to sell it or rent out part of it, it doesn't actually generate cash to pay for groceries, medical bills, or daily living. You can't walk into Fair Price and swipe your HDB living room to pay for rice. Liquid wealth is really what I'd call usable wealth. This is money and assets that can be easily converted into cash or invested to produce income. Think cash savings, stocks, especially dividend stocks, REITs, and bonds or income-generating funds. Here's the power of liquid wealth. If you had $1 million invested in dividend stocks and REITs with an average yield of 5%, that's about $50,000 per year, or roughly $4,200 per month, in recurring passive income. That's money flowing into your bank account without touching your capital. The beauty here is that this income is perpetual. As long as the businesses and trusts keep generating profits, they keep paying dividends. You're not eating into your $1 million, you're living off the cash flow. Add CPF life payouts on top of that, and you create a sustainable retirement safety net. Between dividends and CPF life, you could cover your monthly expenses comfortably without ever needing to sell your assets. This is the key difference. A net worth millionaire with all wealth and property might still struggle with cash flow. But a liquid net worth millionaire with a portfolio of dividend stocks and REITs enjoys true financial freedom because their money is working for them every single month. So the lesson here is, wealth isn't just about how much you own. It's about how much of it is usable and income producing. That's what makes you cash flow rich. Chapter 4. Why cash flow beats net worth every time. Don't just aim to be rich. Don't even aim to be just cash rich. The real goal is to be cash flow rich. Here's why. Net worth on paper doesn't pay the bills. You can own a $2 million condo, a fancy car, or luxury goods, but if these assets don't produce income, you're still financially fragile. Cash flow, on the other hand, pays you every month. If you have high net worth but zero cash flow, you're stuck. And in a recession, your net worth can fall sharply. If you urgently need money, you might be forced to sell assets at the worst possible time, often at depressed prices. That's why passive income is the best insurance in the world. It shields you from retrenchment or sudden job loss, pay cuts during economic downturns, and even disability or health issues that stop you from working. Over time, building strong passive cash flow also frees up your most valuable resource: time. Work becomes optional, not mandatory. You can choose to spend more time with family, focus on health, or pursue projects that are meaningful without worrying about how to pay the next bill. So, the lesson here is, net worth can look impressive, but it's fragile and illiquid. Cash flow is what gives you stability, resilience, and true freedom. Chapter 5. For those who haven't reached $1 million yet. If you haven't reached that $1 million milestone yet, don't be discouraged. The truth is, even if you're earning an average income, say $5,000 to $6,000 a month, which is the median salary in Singapore according to Ministry of Manpower, you can still build meaningful wealth over time. How? Start small. Begin by saving 30 to 50% of your take-home pay. It might sound tough, but this discipline is the foundation. With those savings, invest in income-generating assets, REITs, blue-chip banks, and solid dividend-paying stocks. In the first year, the dividends may feel small. But here's where the magic happens. Reinvest those dividends. Over time, this creates a snowball effect. What begins as a small trickle of passive income gradually grows into a steady stream, and eventually into a river. The key isn't luck or timing the market. It's discipline and patience. Wealth for the average worker in Singapore is built brick by brick, paycheck by paycheck, dividend by dividend. Chapter 6. For those with $1 million plus but illiquid or non-income assets. Now let's talk to those of you who already have $1 million or more in liquid net worth. On paper, that's impressive. But here's the problem. Too many people have that wealth tied up in jewelry, luxury watches, fine wine, or even non-dividend growth stocks. These assets may look good, they may impress your friends, but they don't pay your bills. If your goal is to be cash flow rich, you need to shift at least part of that portfolio into income-generating assets. Think about it. Blue-chip dividend stocks like DBS, OCBC, UOB, strong REITs like CICT, Mapletree Logistics Trust, Keppel DC REIT, and infrastructure trusts such as Keppel Infrastructure Trust. At a conservative 5% yield, even putting $500,000 into these assets generates $25,000 a year in passive income. That's over $2,000 a month. That's real cash flowing into your account without you having to sell a single asset. This is the freedom we're talking about. Not wealth that just sits on a balance sheet, but wealth that pays you to live, month after month, year after year. Final thoughts. So yes, Singapore may have 242,400 millionaires. But here's the real question you must ask yourself. Are they truly wealthy, or are they just paper rich? If you haven't yet reached $1 million, don't feel left behind. Focus on building it step by step, through disciplined saving, consistent investing, and the power of compounding. Every dividend reinvested brings you closer to true financial independence. If you already have over $1 million, but it's tied up in jewelry, luxury goods, or non-dividend assets, then it's time for a reality check. Those things may look good, but they don't pay your bills. Shift your wealth into dividend-paying stocks, REITs, and income assets that will put real cash into your pocket month after month. Because here's the truth. A condo valuation won't feed you, a luxury watch won't fund your retirement, and being net worth rich won't protect you in a downturn. But cash flow will. Passive income is the only kind of wealth that keeps working for you, in good times and in bad. True financial freedom isn't about how much you're worth on paper. It's about how much your portfolio pays you to live, every single month, without you lifting a finger. So if this video gave you clarity, give it a like so more Singaporeans can learn why being cash flow rich matters far more than being just paper rich. And don't forget to subscribe to Wealth for You and hit the notification bell so you'll never miss updates on REITs, banks, and dividend investing in Singapore. Thanks for watching. And always remember, stay cash flow rich, not just paper rich.